Hello everybody, welcome back to freetradingvideos.com. This is Matador. It is Wednesday, March 25th. We're making our way through the week here. And some very interesting news again. So durable goods orders, new home sales both rise in February. And durable goods orders, of course, are those products that are expected to last more than 3 years. But that was up 3.4% last month. And that was better than expected. And also new home sales rose. I guess it was a seasonally adjusted annual rate, 337,000, and that was better than the expected number of 300,000, but the 337,000 number was still the second worst on record. So hang on one second. Sorry about that. That was D7 on the phone. We talk every day, of course, but kind of fun to get an idea where the markets are going and go back and forth and share ideas and so forth. Anyway, those two bits of news, along with other tidbits in here, can have a move on the market, but a lot of this resistance again that we're seeing is this gap back here, and this is just again the spiders. I love doing this. So we had talked about this before, even yesterday, this $82 mark. It's right up in here, this gap fill, and that's what we're chewing on right now. So when I zoom in, even a 15-minute chart shows that bumping action very nicely. Excellent stuff. Nice gap up this morning. It runs right up into that number again, tests away some of that resistance, and we're just chopping sideways now, going right through lunch. It's about 12:47 Eastern Standard Time. I wanted to do a later video to watch how these things were sort of working themselves out. And so that's what we've got. Intraday market internals. The trend is also at 1.71 right now, which is a little bit bearish. The trend Q is neutral. I wouldn't call that bullish at 0.94, but there's a bit of a divergence now between the trends. Sometimes the deal breaker can be the VIX, and this guy is actually producing what some people would call an ascending triangle, even though it's basing kind of in the middle of this last sell-off. So that's also, to my eye, about neutral, but a little bit more bearish than bullish at this point. And even some of the stocks that were relatively strong yesterday, like Goldman, they're kind of just running up like the broad market in the morning, but then selling off more dramatically than the broad markets, and with good reason. We talked about why. Goldman wasn't necessarily a good buy into the decline in 200 MA on a daily chart, things like that. So just looking at some of those things, kind of happy with actually how the price movement is going on that news. It's just chewing its way past this gap. Again, the same one we talked about, the declining 100 MA on the daily chart, and that's what we're seeing right now. But it's also not a dramatic sell-off, so that's pretty positive actually. So stay tuned. Again, look for relative strength and weakness stocks, and I would trade on those rather than the broad market right now personally, especially with the mixed broad market internals. So your comments yesterday were awesome. I went running around the house when I read them, and I responded to every one of them, so thanks for that. I'll try to do that consistently, and your ideas are well taken. So have a great day, everybody, and I'll talk to you soon.